Good morning, everyone. I see people are starting to join. We're getting ready for the webinar to begin at 9 o'clock as people are joining us. Good morning. This is Kathleen Reardon. I am the CEO of the New Hampshire Center for Nonprofits and am pleased to be here this morning with my partners from the New Hampshire Charitable Foundation and the New Hampshire Community Development Finance Authority for today's webinar. We're expecting over 350 people have registered for the webinar, so I think it will take a little time for people to get in. So I am going to allow a little bit of time there and do some introductory remarks and housekeeping on a more sort of slow paced manner to allow that to happen. I just wanted to remind people and thank you for submitting your questions. I think the number of people who are participating in this webinar and have submitted questions in advance are a great reflection of the nonprofit sector and your interest in reporting, in being very compliant and transparent in that. And so those are all good kudos to you in your efforts. We're really pleased to be working with the Charitable Foundation and Community Development Finance Authority as administrators of the Governor's Office for administrators for the New Hampshire Nonprofit Emergency Relief Fund. You may recall way back, gosh, it seems like years and years ago, but we effectively advocated to have this relief fund carved out of the funding from the CARES Act, and more than $40 million went out to nonprofits, mostly through the Nonprofit Relief Fund, but there were other programs as well. And so just as a reminder, the partners here were administrators of this fund, but Gopher is the one that is the reporting entity. And so we are going to do our best today to talk about what the state expects from this. And it's very, very important to us in this process to provide the tools and resources to nonprofits to effectively first apply for these funds, and now that you've received them, to be able to report on them. That's part of our commitment at the center, as well as New Hampshire Charitable Foundation and CDFA. So that's our goal this morning, is to talk about that. We are not going to be talking about, this is not an opportunity for new funds, and we won't be going in detail about other relief efforts, but I can reassure you that the center is very focused on keeping an eye to Congress and what is continuing to roll out, as well as the state level. And we'll continue to advocate for the needs of the nonprofit sector. I encourage you, if you have not already done so, to sign up for our newsletters to stay informed about what we're learning about and what we're advocating for. And you can go to nhnonprofits.org for that information. So a couple of other housekeeping items. You can use the question and answer tab for submitting your questions. Again, we're going to do a presentation to start with to go through the reporting process and expectations. That will answer a number of the questions that have been submitted in advance, but certainly submit that question at any time and we'll get to as many of them as we can in this hour. We are recording the webinar, and we'll be sending out a recording along with a copy of the slides later this week. They'll also be posted as well, and other resources will be available. I think that's it for the housekeeping, so I will turn it over to, I'm not sure who I'm turning it over to. Simon to start, or Deborah to start?
Hi, Kathleen. Hi, everyone. My name is Simon. I work at the New Hampshire Charitable Foundation, and I'm here to set the stage for what you're going to hear a bit about today based on Kathleen's introduction. As she mentioned, the goal of the program today is to share information about the state's reporting process for the Nonprofit Emergency Relief Fund. I'm going to start by defining at the upfront two acronyms, which you're going to hear all the time. The first is NERF. That's the New Hampshire Nonprofit Emergency Relief Fund. That is the grant program that Kathleen mentioned that was administered by the 3 partner organizations. It's been called New Hampshire Nonprofit Grants. It's been called a few other things, but we will be referring to it as NERF. If you completed an application on the Charitable Foundation's website, that's the NERF program. We'll also be referring a lot to Gopher, not the animal, but the state agency called the Governor's Office for Emergency Relief and Recovery. Gopher is the entity, the state entity that is overseeing and managing the reporting process for all CARES Act funds. You can see on the screen the things that we're going to talk about today. We will not be doing a step-by-step or a question-by-question review of the application. We're going to be focusing on questions 16 through 19, as well as what's in the application is step 3, and we'll get to that in a little bit. The next slide, Stephen. Oh, sorry. There we go. So today we are going to be focused on the revenue loss expense report. And what does that mean? This is the report that almost all NERF grantees will have to submit. The report was not designed exclusively for NERF. In fact, Gopher has designed a report for many of their grant programs. You may know that the state had dozens of grant programs that they administered, and they've tried to design one reporting system to capture as many as possible. That means that some of the terminology may be not as familiar to you because it's not just nonprofits that will be reporting. And part of the goal today is to hopefully demystify some of that for you. Now, how do you know if you have a beneficiary grant agreement? It's called the beneficiary grant agreement, or otherwise known as the short form. If the grant agreement you signed with the state is less than 6 pages, your short form. And that's almost everyone. Only 17 of the 500 or so NERF grants are short form. Those other 17, there was actually a different report released yesterday. It's called the Expanded or New Program Report. We have reached out directly to all 17 of the organizations that have this type of award in different grant program. And so just know that that report is different. A lot of the information will actually be helpful to you in where to go and where to find information that we'll talk about today, as well as all of the technical assistance we'll be providing that we'll share later. But just know that there are 2 grant reports. And if you have that longer grant agreement, we will not be focusing on that report today. We also have a deadline that Gopher has put out, January 30th. Yes, it is a Saturday. I will also note that many Gopher programs, those dozens of grant programs I mentioned, almost all of them have different deadlines. If you received more than 1 grant from the CARES Act, more than 1 report is necessary. Again, we're focusing just on the NERF program, but you should go to the Gopher website, which we're going to put up on the screen next, that details when all the report deadlines are and what the reporting requirements are for each of those programs. Finally, I'll say that this grant program is actually unlike a typical grant report you might complete for a private funder. It is to establish anything that qualifies according to the state's interpretation of the CARES Act, even if that's different than what you submitted in your application. So the goal of today will be to talk through how to describe and submit what qualifies. Stephen, the next slide, please. And so this is where you need to go. You'll see the web address up at the top, and there are some really important things that will answer a lot of your questions. When you go to that website, you will see that there are two PDFs at the top. One is an FAQ, and one is a step-by-step reporting instructions. The FAQ is particularly, the questions in the FAQ, numbers 5, 12, and 13, are particularly relevant for the NERF program. However, I will say that the entire document is really helpful. The step-by-step reporting instructions, another PDF on the state's website, actually has the template of the report within it. That is the document that you want to refer to, and it will guide you through how to complete the application. And the instructions are for both those short form grantees, which is the grant program we're focused on today, as well as the long form grantees for that new grant program. You'll also find a link to how to submit a report on that website. I will note the state has said that only current versions of Firefox and Chrome will work on reporting, so that's an important note. It's also important to note that the state has made clear that they will not accept any emailed information. The only information they will accept is through this web portal. Finally, I'll note that they have also indicated that despite the new CARES Act legislation, that there will be no extension for the grant deadline. January 30th is the grant deadline that they will be sticking to. I know that's a lot. That's an overview. And I'm going to turn it over to Deborah and then Debbie to get into the weeds of what this report looks like.
The next slide. Good morning, everyone. Deborah Schachter from the Charitable Foundation. And we are going to take a dive into the weeds, but I want to just stay high level for a moment because I think as you're navigating through the questions, it will be helpful to tether back to this big perspective, which is the state is looking to have you submit information that will answer this question. Did your organization have revenue losses and/or COVID-19 expenses that weren't covered by another state or federal relief program? That's important. And that are at least as large as the amount of the NERF award or some other Gopher program award that your organization received. So the template that the state has produced for reporting is really designed to get at this key question. The state wants to make sure that the requirements of the federal act have been met, particularly in the event that they may themselves be subject to audit. And so they're not looking to claw back money, but they are looking to confirm and have you confirm, and the onus is on each applicant and recipient organization to confirm that you were eligible for the grant funding that you received. And that's really the central purpose of the report. Again, as Simon said, often grant reports are designed more broadly to have a window into how things went and to tie back very cleanly to the application that was the basis for the award. In this case, the report is less directly connected, not necessarily connected to the information that you supplied when you submitted the application, and we can talk about that a little more. We will talk about that a little bit more. Importantly, the starting point, the framework that the state has created in its reporting template is to look at revenue loss by comparing 2019 revenues and 2020 revenues, and that's calendar year revenues. We know that folks have different fiscal years. This report is based on calendar year revenues. That is the starting point. And as we'll discuss, there's also some flexibility if that comparison requires you to provide additional information to explain your own particular circumstances. Next slide, please. Great, thank you. So what do you need before you sit down to tackle the report? First of all, there's a lot of basic identifying information. Your application number, your state vendor number, your federal tax ID number, your organizational address, contact information, that sort of thing. A few particulars, we've gotten a lot of questions about where do you find some of these numbers. Your application number is going to be in the email that Gopher sent to you. And if for whatever reason that email went to somebody different than the person who's completing the report, or you can't locate the email, you can contact Gopher directly and ask them to send you that number. And we'll share some contact information, for those inquiries at the end of this PowerPoint. Your vendor number is going to be right in your state grant agreement. And again, we can assist if you can't locate that, or the state can assist in those kind of technical questions. Importantly, as you're thinking about what information to pull together as you sit down to prepare your report, know that for the most part, unless you feel that it will be helpful to you, you don't really need to attach receipts, invoices, a lot of backup documentation around your financial information, but you also really need to have that stuff available. So what you decide to upload is something we can talk about in that last bullet, any other information that you want Gopher to look at, but you will want very much to set that backup information aside and hold on to it for as many as 5 years in the event that there is an audit or an inquiry, to substantiate the information that you've provided. I do want to mention there are some organizations that do work in New Hampshire, but also in other states. If that represents your circumstances, you're going to want to provide calendar year total revenues and calendar year 2020 revenues and the revenue losses that haven't been covered by another relief program, and any assistance that you got, and the expenses, all those different items that are listed here, you're going to want to provide those just for your New Hampshire sphere of work. I want to note something that can be a little confusing, that while calendar year revenues are the snapshot that the state is asking for, so 2020 up to and including the end of the year, the expense window is actually, and this is governed by federal law, is actually March 1st through December 30th. And again, that's not something the state chose, that's based on the CARES Act provisions. So expenses will go back only to March 1st, revenue is for the entirety of the calendar year. The final quick note about this, and again, we can talk more about this and we will address it in some of our examples, is if you had multiple awards, so a NERF award, but also some other Gopher awards, then you're actually going to need to submit a separate report for each Gopher grant that you got. And you're going to want, you can't double count, you're going to want to single out the relevant information for each award. And that will be both on the revenue side and on the expense side. And we'll do our best to illustrate that a little bit in a moment. Next slide, please. I want to highlight this. Simon addressed it. We're getting a lot of questions, and it makes sense, about whether the report needs to mirror your application that was the basis for your award. And the short answer is no. And let me explain that a little bit further. Any combination of COVID-19 related income losses in calendar year 2020 and or COVID-19 related expenses that were incurred from March 1 through December 30th that substantiate that you were eligible, that is, that they're equal to or greater than the amount of grant assistance that you got, will be sufficient to establish your eligibility, even if those are different from the projections that the award was based on. So a couple things about that. Gopher made the determination that NERF awards were going to be made at 75% of the amount that grantees were determined to be eligible for based on the application and the review. So that provides a cushion for a lot of grantees. That is, you were awarded less in NERF funds than the numbers established your losses and expenses to be. But also, nobody knew in June what the last half of this crazy, unprecedented year was going to look like. And so your projections for the latter half of the year may be different than what your actual circumstances were. Having said that, it may be useful to you to look back at your application and refresh your memory, if you don't have it handy, about what it is that you projected at that time. And you can absolutely do that at any time. You can go into the Charitable Foundation's online grant source system and go into your organizational profile and look at your grant application and see exactly what it was that you put in your application. And that may be helpful to you as you're completing the report, even though you have flexibility to include updated or new or different information. If you have any difficulties for whatever reason getting into the system, you can go to grantapp@nhcf.org, and we will provide that address with follow-up to this webinar to make sure that you know where to go to get any questions answered about accessing that online system if you have any issues. Next slide. Debbie, I think I'm turning it over to you.
Yes, that is true. Thank you, Deborah. All great information. I will hopefully add to all of that. And for those of you that don't know me, I am Debbie Morin. I'm the Chief Financial Officer for the CDFA located in Concord. What we're going to go through here in the next few slides are really the meat of what I think your questions are about, and that's questions 16 through 18 on the actual reporting portal itself. As you've heard, and I'll repeat a lot of what Simon and Deborah have already said, question 16 is kind of where it starts, and that is asking for your calendar year 2019 revenues. Again, that's calendar year January 1 through December 31st, and that would be your total revenue amount. Not net revenues, but your gross revenues. Question 17, again, is asking the same question for 2020. A lot of you are in the midst of trying to close your books, which I completely understand. You're going to want to do your best estimate if you have not had a chance to book all of your entries for your year end. But that deadline for January 30th is a hard stop. So you really do need to get as much of that information into your reporting system so that you have a great number to start with for your 2020 revenues. The only other thing for question 17, as you read it in the actual report, is that it wants you to take your 2020 revenues, but delete out or remove out any state or federal relief aid that you got. So that includes this NERF award. It would include PPP or any of the other awards that you have gotten related to COVID-19. We are going to go through a couple examples, so don't fret, we'll get there with some numbers. Question 18 then says, you want to report what your losses are between the 2 years. So if you were looking at basic math, that would say question 16 minus question 17, and then exclude any other relief that you got through another federal aid program. For most of you, we're going to assume that this is really going to be the basis of your answers for these questions. And there will be some of you that will want to include some other information, but I would guess that the majority of you would be at this kind of stopping point. So, excuse me, I lost my train of thought. If this number really represents what you've lost over the course of 2020, then you're in decent shape if that number is greater than or equal to the amount of NERF awarded that you got. If it doesn't accurately represent your losses, then you're going to want to think about some of the other things we've talked about, and we'll go into some examples so that you can explain to the state why you should be able to keep the rest of the NERF money that you've received. So let's try to walk through an example. I know it's kind of high level, but we'll see if an example will help get through it. Stephen, next slide. So these are very basic examples. Say for instance, that your total revenue in 2019 is $200,000. And for all distinct purposes, your revenue for 2020 is also $200,000. 100,000 of it is just from your own earned revenue, contributions received, fundraising efforts that you've put on. 50,000 of it is from the NERF grant for the program that we're actually talking about, and another 50,000 from PPP. So question 16, you would enter in $200,000 for your 2019 revenues. For question 17, you would actually enter $100,000. That is the $200,000 in total revenue. Would be 100,000 from your earned, minus 200,000 would be your total revenue, but you would only enter in $100,000 because that's what you actually earned in revenues. You would not include the $50,000 NERF grant, and you would not include the $50,000 PPP. And if you had other sources of NERF funding, or I should say CARES Act funding, you would also exclude those. To walk you through to the next piece of it, so question 18, you would look at it and say, okay, question 16, which is my $200,000 from 2019, minus my $100,000 from 2020, which would be question 17. And then you would also subtract out the $50,000 that is not NERF related, the PPP, and that would get you to $50,000 for your question 18. All things being equal, that would likely be the answer that you would put into question 18. Then you're going to want to stop and take some stock and say, does this $50,000 accurately represent what I did lose between those 2 years? A lot of you have asked questions about, well, what if I was going to have a new fundraiser that I didn't have in 2019? Or other efforts. Unfortunately, the way that the state put this together, this reporting portal, they really only want you to compare 2019 to 2020. And we are hopeful with the 75% grant amount that you're still kind of going to come in within the amount of grant that you received. Next slide, Stephen. All right, so as I said, once you kind of do the math, you want to sit back and take some stock. This should be really what the majority of you will be looking to calculate. But there are some of you that may have other factors that come into play. A lot of you receive restricted grants, grants that your donors have said you can't use for operating losses. Also gifts for a capital campaign. If you're going to put an addition onto your building or, something of that nature, and your donors have told you that is for those purposes only and not for operating revenue, those are things that you're going to want to explain to the state that those are really not qualifying revenues for you to help you make up your revenue losses. When you enter your answer to question 18, you will need to include these dollar amounts. But what you're going to want to do is there is an additional section that you will want to explain some of these revenue restrictions. And those should help with explaining to the state why you should continue to receive that NERF grant. There are also going to be some of you that put into place new programs, and also those people that had to expend some money for COVID-related items. Those are additional questions that come after question 18 that we'll go into in a few more minutes. That will help you explain why that number may not be the total amount of the NERF grant that you received. Next slide, Stephen. So let's try to walk through one that may be a little more complex. We'll start with the same $200,000 in revenue in 2019. But say, for instance, you have higher revenue in 2020, and we're going to use for this example $250,000. So you had $150,000 in regular earned revenue, $50,000 from the NERF grant, just like in the previous example, and $50,000 in PPP. If you walked through that same math, you would have to actually enter 0 in question 18, because your $150,000 in actual earned revenues, less your other award, would show that you were over and above the revenue loss between the 2 years. You're going to want to, but in this instance, $50,000 of that earned revenue came from restricted funding. So you're going to want to make sure you have documentation of that restricted funding so that you can share that with the state so that they can understand that that funding could not be used for operating losses. Additionally, if you have other lines of business for which you received an award, you need to make sure that you're also subtracting those awards from your answers on question 18. For example, if you receive money from a live venue or childcare, you need to only show on question 18 for NERF in particular what you are experiencing for losses related to your NERF line of business. So while your revenue is for your total business, your answer to question 18 is only related to your NERF piece of the pie, so to speak. When you actually complete your report for the other grant you may have received, you'll be doing the same thing and showing your total revenue for each of those years. But in your answer to question 18, you're going to be only showing your losses related to that particular line of business. I'm hopeful that I've kind of explained a lot of this. I will say that I'm going to reiterate what Deborah said earlier. You want to document everything as much as possible to keep for your own records in the event the state comes back and asks you for additional questions. And make sure that you upload things that you believe will help your case when the state does look at your report. But you don't need to put all of your receipts. Again, those should be things that should be kept in a file in the event the state comes back and asks you for additional information. All right, I think, Deborah, I'm turning it back over to you.
Thank you. Next slide, please. So first of all, I just want to name, this is confusing, right? So if you're confused, you know, you're in good company. Let's try to unpack it a little bit. And I want to focus on what the template calls step 3 and what my colleagues have referred to about the ability to upload any explanation. That can be your narrative text, it can be documents that you want Gopher to consider. Let me take a step back and sort of frame what Debbie's been describing with examples in this way. The template for reporting that Gopher created really rests on 2 underlying assumptions. One is that 2019 is a really good base year for you. It's a good comparison year for what happened in 2020. And the second underlying assumption is that your 2020 revenues are essentially fungible, that $1 equals $1. And those things may absolutely be true for you, or more or less true enough that that methodology of looking at 2019 and subtracting out 2020, not counting any COVID relief that you got, will be absolutely sufficient to show that you were eligible for the award that you received. However, lost revenue, and this comes from the state's definition in their FAQs, is defined as income, revenue, or receipts that were reasonably anticipated during the 2020 year, but that didn't occur because of COVID-19. And so if you think about those two underlying assumptions, that 2019 is a great base year for 2020 and that revenues for 2020 were fungible, and if your particular circumstances are different, if those assumptions don't apply to you, so that could be 2019 really looked different. You had a whole new program that you stood up in 2020. The state gave you a contract to run a whole new, not COVID related even, just a whole new program. You entered a new sphere of work. So 2019 isn't a good comparison perhaps for 2020 based on your unique circumstances. Or you had some revenues in 2020 that actually weren't fungible at all. And Debbie has walked through some examples of those. Maybe you had a capital campaign, or you got restricted gifts, or you got funding that wasn't allowed to be used in 2020 because it was a multi-year award for future years, et cetera. Then think about this definition, and what you want to do using step 3 of the report is supply any information that will explain what your circumstances were. The state created this as a very open-ended portal, piece of the report, if you will, so that you can explain why just that simple math approach actually doesn't tell your story. And so we really want to emphasize that you have the flexibility consistent with whatever's true for your organization to use that space to elevate the facts that you want Gopher to consider. We totally understand that group circumstances are going to vary, and we're not going to be able to address your unique circumstances necessarily on this webinar, but as we'll describe in a moment, there's going to be some technical assistance available so that you can engage with somebody to help you think that through. Next slide. Stephen, great, thank you. We've talked a lot about revenue in some ways because that's just the trickiest, sticky wicket here in the report, and because that will vary organization by organization. But I really want to underscore that the other side of this equation, of course, is COVID-related expenses. And these may be expenses that you predicted at the time that you applied, or they may be expenses that you didn't predict, but that you actually incurred through December 30th of last year. We've listed here some examples. These are drawn from earlier guidance that the state endorsed, drawn originally from some Treasury guidance under the CARES Act. And these are just examples, but they cover a lot of ground, and they may help you think through what your unique circumstances are that could have you, address this expense question, which is question 19 in the template. So PPE, sanitizing products, other protective supplies, costs above and beyond the normal for cleaning and disinfecting spaces so that you could bring clients or members of the public or just protect your own staff. If you had expenses to quarantine individuals that you serve, if you provided emergency assistance, whether that was food, financial assistance, gift cards, other things for folks you serve who were impacted by the economic impacts of the pandemic, or that you were responding to public health precautions to assist them. If you had to pay additional staff time because you had client needs or community needs that you were meeting and you couldn't use your usual volunteer base, they weren't all available to you because of the public health emergency, that is an example of a permitted expense. If you had to provide additional equipment to your staff to improve or permit their telework capability, so many folks are working from home, those are permitted expenses. Other tools or supplies that you may have had to purchase to support your social distancing, to change your practices to accommodate remote work or social distancing, to accommodate service delivery in the environment that we're in. All of those things are expenses that you can include, and capital improvements. So you may have changed your system for ventilation in your facilities. You may have reconfigured your space to permit social distancing, et cetera. So those are just examples, but that covers a lot of ground, and hopefully you can see your own experience in those examples. Really want to stress that even if you believe that you've reported sufficient income loss to justify your grant, that you should still fill out question 19 on the form. Think of it kind of as belt and suspenders. If the state, for whatever reason, has questions about what you've shown in terms of income loss, you can demonstrate your eligibility also with these expenses that you've incurred. And so we really recommend that you fill this out as completely as you can, capturing all the actual expenses that are COVID-19 related that you've experienced. Want to say that step 3, that open-ended, place where you can upload things that we've been talking about, excuse me, it's not necessary to upload all the proof of your expenses. The state's not asking for receipts and invoices and so on as part of your submission. But as everybody so far has said, you should definitely hold on to those things. So keep a file, keep your invoices, your receipts, your backup documentation, but you don't need to use that upload field in the report to provide all that kind of backup detail as part of your report. Next slide. I believe, Simon, that's to you.
Hi, everyone. So as Deborah said, this is a lot of information. It isn't necessarily immediately clear to everyone, and we understand that. And so we're going to be talking about some resources that we have to help you with this Gopher reporting process. But some reminders from this webinar to start, and that is what we have described, those questions 16 through 19, as well as step 3, are for that short form beneficiary or grant agreement. If you have that grant agreement, that short form, all but 17, there isn't a time limit necessarily to expend the funds if they were received as a reimbursement. Remember that multiple Gopher awards mean multiple reports. Sometimes that means reporting directly to that Gopher website. Sometimes you'll see on that Gopher website, like the State Council on the Arts, their reporting program is actually different. Similarly with the child care grants, you are directed to a different agency for reporting. So this report is just for the Nonprofit Emergency Relief Fund. If you have a bookkeeper or an accountant, you should talk this through with them. And finally, remember, documentation is your friend. If it supports your eligibility, as Deborah described for step 3, then you should include it. It also doesn't mean you need to include receipts for every single purchase you made. However, you are required in your grant agreement with the state to save documentation from every expense for 5 years. There is a 5-year window where the state could audit any organization that received an award. So tuck it in a file, create a file on your desktop or in your organization that multiple people have access to, and make sure it sits there for 5 years. One last slide, Stephen. Okay, so help and questions. We know that there are a lot of them. And so here's what we can do to provide some technical assistance. The first is that ultimately the decision of what you submit is each of your organization's full responsibility. We're providing this to try and help as much as we can, but ultimately that decision is going to need to be made by your organization. There are some questions that we won't be able to answer. Again, this isn't our reporting process. We didn't design it. It's for multiple programs. And so for some questions, especially things like application number, et cetera, you will want to go to that Gopher email address that you see, reporting@gopher.nh.gov. That is the Gopher helpline that they have set up via email, and you can ask questions directly to them. In addition, we know that we want to be available and be more responsive because there are going to be a lot of different people from a lot of different grant programs reaching out to Gopher. And so you can see this contact@nhcdfa.org email address. For specific questions you have, you can send them to that email address. We will do our best to respond within 2 days. And of course, as you know, that depends a little bit on volume. If we get 100 questions today, we will answer and get through them as quickly as we can. Finally, I want to say that we have some individualized help for people that want to talk through what that application looks like. As Deborah and Debbie mentioned, for some organizations, reporting will be fairly straightforward. You'll give your 2019 revenue, you'll give your 2020 revenue, and you'll be good to submit. For others, there may be detailed explanations related to canceled one-time fundraisers, capital campaigns, bequests that you weren't expecting, where that revenue picture isn't as clear. If you want to talk that through, you can request a one-on-one appointment. And you do that through that CDFA email address, but you need to send us your name, your organization's name, and your phone number so that we can pass that on to have somebody call you. Again, that we are trying to respond to people within 48 hours or 2 business days of reaching out, and we will do our best to do that. And so I'm going to encourage everyone to take a deep breath. There are going to be some questions we can't answer, and we'll do our best to field some questions now that we have some time. And Stephen, do you want me to look through the questions? Do you want to do that?
While Stephen is taking a look at the questions, I wonder if I could just take a moment to underscore something important that Simon said that can be confusing, and I know we've gotten questions about in the past, which has to do with folks wanting to know what time limit there might be to expend the money they received, and sort of just drawing a distinction between showing that you met eligibility within the time frame of the CARES Act, that is before December 30th. But if you got money that reimbursed you for losses, let's say you had to cancel a fundraiser or what have you, you got your NERF award. Once you got those dollars in-house, if they were for losses, those are reimbursement to your organization. And as long as you spend them consistent with your mission, there's no need to prove that you went ahead and expended those grant dollars within the 2020 year. So again, just to distinguish, you're showing that you incurred the losses within the time frame of the CARES Act, but once the dollars are in hand, those are your reimbursement dollars and you can spend them as you see fit. That's not the same as if you're demonstrating expenses. You obviously had to incur the expenses within the time frame that is up until December 30th. So that may be confusing for folks, but think about it as reimbursement. When you submitted your application, you said, here are the losses we're going to experience. The grant is a reimbursement to you. And then once the dollars are in-house, they're yours to expend consistent with your organization's mission.
So I'll do my best to paraphrase some of the questions we've received and sort of highlight some of the ones that I think are common. It seems like there are a lot of questions around questions 16, 17, and 18, not surprisingly, and questions about how the math works out on that, and specifically around question 18. And actually, let me go back in the slides. I apologize. If we could walk through even just the simple case, just walk through that again and explain specifically how we get those numbers again, just more slowly, because there's questions about state, some of the state and federal relief already being excluded before you subtract 17 from 16. Does that make sense?
Yeah, let me give it the college
Sure.
try again. And it is very confusing. We can certainly tell you that we, as a group, Deborah, Simon, and I, have talked through this multiple times together to try to make sure that we clearly understood it in order to be able to explain it to you. So it is not, even though we were calling this the simple case, it's not simple. So let's try one more time. Obviously, the 2019 revenue we're going to say is $200,000. As we move to question 17 for the 2020 revenues, we say, let's start with what is actually on your books. So what did you actually record as revenue on your books? And for this example, we're going to say that you had $100,000 in actual earned revenues from contributions, from campaigns, donors, however you got your revenue, if it was program income, things like that. Then you also received $50,000 in a NERF grant from this particular program that we're talking about today. And you received $50,000 in PPP. Whether that was a loan or a grant, that doesn't actually matter at all. It's still considered revenue. So if you take the 100,000, the 50,000 NERF and the 50,000 PPP, you would be showing on your books that you actually had $200,000 in revenue for 2020. Question 17 says, what is, and I'm going to actually read it. So I am actually saying the words that come from the actual report.
I've got it up right here, Debbie, if that's helpful. So for 17, it's actual gross reporting, actual gross operating income / receipts / revenue for 2020. When reporting gross receipts / revenue for 2020, awardees should exclude the revenue from any state or federal COVID-19 program identified in step 2. Question number 1. If you are a governmental entity and did not receive lost revenue replacement, you should enter 0.
Perfect. Thank you, Stephen. So hearing those words, question 17 is saying, report your revenue, $200,000, less any other state or federal grant revenue that you received. So that's the $200,000, less the $50,000 NERF grant, less the $50,000 PPP. That brings you down to the $100,000. That's the number that should go in question 17. So then as we move down to question 18, that actual question says, total amount of income and receipts and revenue losses reported for this program that have not been covered by another state or federal COVID-19 program. If you are a governmental entity and did not receive lost revenue replacement, you should enter 0. So question 18 says, you need to report the losses that you actually received from the program that we're talking about. So in this case, the NERF program, your nonprofit itself. So the lost revenue, simply done in math, is your $200,000 that you reported in question 16 for 2019, less the $100,000 that you reported for question 17 for the year 2020. That simple math says that's $100,000. But then it says to then further reduce that dollar amount by money that you received outside of this grant for COVID relief. So in this instance, that would include the $50,000. So your lost revenue is $100,000. You then say, I received PPP of $50,000 to help me cover that $100,000. So my lost revenue really is $50,000. The 100 less the 50 PPP. So the number you would enter in question 18 would be $50,000. That's when we say to you, step back and take a pause and say, okay, I got $50,000 in my NERF grant. I have now reported that I had $50,000 in lost revenue. You're technically at this point saying, okay, I'm kind of equal. The government gave me $50,000 to help me cover $50,000 in losses. I've now proven my eligibility for this grant, if we continue to use the words that we've used all along. I would say you could certainly stop and say, great. At this point, I'm very hopeful that the state isn't going to ask me to give any money back because I've proven that I deserve the $50,000 based on this very simple math through these steps. Then we go on to say, listen to what Deborah said and say, let's not just stop here. Let's think about the other things that we could also show the state that says, I really did need this money because I had additional COVID expenses. And those are the things that you're going to want to add into question 19. And we only tell you to do this, even though you've now proven your eligibility, we tell you to think about adding these expenses in there, because in the event the state comes back and says, oh, wait a minute, you didn't show this in your revenue, or you really weren't at that $50,000, you were actually less, you'll want to have shown that you did have other expenses that you needed that $50,000 for. And we're just cautioning you to give this extra bit of information to the state because we don't want you to have clawback funds from them. I'm hopeful this maybe explained it a little better than I did the first time around.
Debbie, this is Kathleen. I'm just going to jump in. I think some of the questions are about, are you in fact deducting the state or federal relief twice? Because you have not included it in the 2020 revenue. So why would you deduct it again in the losses? So the simple math makes it look like your losses are $100,000.
Your losses are $100,000. That's absolutely true. And it does look like that you've deducted them twice. But if you step back and think about it, your losses are $100,000. The $200,000 in 2019 versus what you actually earned through your programs of $100,000 in 2020. So your losses are $100,000, but you did receive $50,000 from the government in PPP to help you with those losses, to cover your payroll and cover all those other operating things that your actual revenues do help you sustain. So you're not technically deducting those twice. Question 17 is trying to get you to what your true revenue for 2020 was without any programs, so that it's bringing you to that actual $100,000. If you look at your books, as I said, when you're actually booking your revenues to your ledgers, you're actually showing that $50,000 grant for NERF and the $50,000 from the PPP program are actual revenues. So your revenues on your books are actually going to show $200,000. Question 17 is saying, wait a minute, step back. Those NERF and PPP funds are not truly revenues to you. So we want you to get back to the point of what were your true revenues that you earned in 2020. So that's why it's telling you to take those out. Then it's giving you that starting comparison of 2019 versus 2020.
Debbie's doing an awesome job explaining something that's legit very complicated, but just another way at this is that the federal law that established this money, that the states got, that turned into, among other things, the NERF grant program, said that it can't be used for things that are covered by other federal relief, essentially paraphrasing. So you're gonna use this approach to say, okay, here are my losses. There are $100,000 in losses, but I can only claim for this program stuff that wasn't otherwise addressed through other relief. So that's why you're gonna need to take into account other state or federal relief grant, or in this case, it could be loan. And that we understand that that's tricky for some organizations, but that's the way that this is being interpreted. You got some other money, you have to back that other relief out when you tell the story of here's the shortfall. You can't double dip, you can't get two relief grants to cover the same loss. It is confusing. It is. And really just underscore for everybody, we set up this technical assistance approach because we totally know that we could probably explain this 4 more times and people are still going to look at their own books and they're going to have questions, and we embrace that. We want to be there for you. We want you to be able to sit down and we heard from nonprofit colleagues that it would be helpful to have a sounding board, to have someone to walk them through it. We've stood that up.
Thank you. It's 9:57. I don't think we're going to get to all of these questions, so I will go back to the slide that has all of the other contact information. And again, for everyone who's been asking, a recording of this webinar will be made available. PDFs of the slides will be made available, and again, that be sure to take advantage of the technical assistance if you need that additional help. I do want to cover at least one more question that's come in, and it's around sort of question 13 and then how it relates to the other questions. Question 13 asks which best describes the awardee's accounting period, and then based on that answer, does that then determine using calendar year versus fiscal year for those examples?
No, they want to know how your organization budgets. So if you budget on a fiscal year, you'd enter fiscal year. That does not indicate what you should report in the later questions 16 and 17. 16 and 17 are calendar year. If you look at the step-by-step instructions that the state has put on the PDF on their website, again, not super clear, but it is calendar year that they're looking for in those instances.
Perfect.
And they do reiterate that in their number 9 FAQ, that they want your calendar year gross receipts.
Got it.
When the Gopher gives a year, when they put a year in there, they mean calendar year. They don't say it, but it is implied when they type in a year.
Perfect. And I just included a link for everybody to the FAQ that was mentioned and the step-by-step instructions that were mentioned. Again, all of this will be shared on the center's website. The recording will be available, slides will be available. I think at 9:59, I don't think we have enough time to get through any other questions through this webinar. Again, take a look at the slide that's on the screen, make note of those email addresses, and take advantage of the technical assistance available there. With that, I guess I'll be the one to wrap it up. Thank you, everybody. Have a good rest of your day. Bye-bye.